TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 8th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't get to the phone, you can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, of course, in the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. This is Workshop Tuesday for Stevie Son. Hey, you can attend. Would love to have you there. In any event, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 160 points, trading at 23,691. S&P is up 11. NASDAQ 100 up 30. Russell's up 14. That's 1% to the upside. Semis are struggling today. They're down a little over 1%, trading out at 1152. Spot volatility index is off 4%, trading out at 2051. Gold back $3. Silver down 3 pennies. Light sweet crude up 76 cents. Leading the charge here, dollar-wise. To the upside, it is the amazing one. Amazon up $23, trading at $16.52. Tactile Systems Technology up 24% or $11 and change. Union Pacific up $11 and change. Molina Healthcare up $10. To the downside, it is Illumina. Illumina is off $19, 14%. I say, yeah, $19, 6%. It is Helen of Troy. That's down $19 and 14%. Booking Holdings down 18. AutoZone off 17. Medifast is down 15. So we have things to look at. Of course, I want to look at what you want to look at. And probably what you want to look at is, hey, Steve-O, what's going on in these markets out there? It's pretty simple. You've got the markets taking on resistance. The bulls taking on the bears. What do you mean, Steve-O? Well, if we take a look at those TAS market profiles, they're beautiful things. We look at the daily and the weekly, and we look at them on the ES, on the YM, the Dow, and the RTY, the Russell 2000. That's panels 1, 3, and 4 on the screen right now if you're watching us on TigerTV. What you can see in panel 1, that's the ES Mini, trading out right now at about 25.61. When it made its high today, its high being 25.81, was running right into the top of that daily profile. 25.85 is the number. It's got a top of its weekly profile, and that's at 25.67. So if you, and you already know this, if you were wondering where the snipers, where the sellers are hanging out, it's between the price point of 25.67 and 25.85. The question is, do the bulls have the power and the strength to clear that area? If not, and you want to join the sellers, well, you know where they are lined up. They're, in essence, right here, right now. They were at least really up at that high as you got towards that 25.85 level. Take a look at the Dow. YM, that's panel number 3 on my chart. If we take a look at the top of its weekly box, that's at 23,790. We're trading right now at 23,679, give or take. The top of the daily profile, 23,674. So you're really printing right now the bid, the offer. It's all right there. You know where support, you know where, well, you know where resistance is. We haven't talked about support here. But what the markets are doing, The reason that they failed this morning, that was their first attempt to try to clear that resistance area. Take a look at the Dow. Each of them doing the same. That's why you want to be paying close attention, whether you're a bull or whether you're a bear. Because if price is able to clear these hurdles out here, that's going to deliver an important message. That message is prices will head higher. We can take a look at retracement levels. We can take a look at the Gartley sell patterns, the potential Gartley sell patterns that they would be forming. But right now, we don't really have to take a look at that because price is up at resistance. Inside the Russell 2000, if I didn't mention it, I don't think I did, you're looking at 1422, the top of that daily profile. 1409, the top of the weekly profile. You're trading at 1422. It's all going to be about what happens today, maybe overnight, maybe in the morning out here, but price is up at resistance. We can see that. I don't know if resistance is going to hold out here. I just don't know. Now, if we try to figure out what was going on, where was price pulling back to, I don't know the answer to that. Because if we take a look at the daily chart as an example, here's the ES Mini. It wasn't Stevie's red line, which is red, by the way. That's down at 2478, so didn't pull back intraday to that level. Neither did the NQ, neither did the YM, neither did the RTY out there. So it's something else. And what else could that be? Yeah, I wish it were some type of intraday pattern. For example, on the 30-minute time frame chart, if we go take a look at it, we had a Tom DeMark setup 9 count when it made its high earlier this morning. That's one of the things that we're going to be taking a look at this evening at 5 o'clock in the workshop that yours truly is putting on. But was price pulled back? Did it pull back to a level of support on a 30-minute basis? The answer is nah, it didn't. But we do have a new profile out here that has a new level of support, and that's at 2550 level. It closed today or earlier. When I say early, I mean it closed this afternoon. You can get it out, Steve-O. You just got to speak maybe a little slower. Nah, I can't do that. Too much energy. So here, if we take a look at 30-minute profile, we know where there's support. That's at 2550 and some change out there, 2 ticks, we'll call it. And we can see resistance on a 30-minute basis, Stevie's green line, 2566. So the question is, will the ES Mini make another run for that resistance level? Well, it will if on a 30-minute basis, price can clear Stevie's red line, 2566. You start heading below 2550, then you've got an A to B equals CD to the downside. That could set up a Gartley buy pattern. That A to B equals CD to the downside would look something like this. There's your A point, there's your B point. At this stage, here's your C point. That would set up a move to about the 2534, but not so fast. That's not going to happen until support gets taken out, and that's at 2550 level. If we take a look at what's going on inside, what do we want to look at here? What do we want to look at here? The Dow. Let's go take a look at the Dow out here. What do we have? Really the same kind of pattern. Tom DeMark set up 9 count on a 30-minute basis. That set up that top out there. Prices trading in between support and resistance. Stevie's red line, 23,705. Support here, 23,587. So in one quick segment, you know what's going on. Like Marvin Gaye. If you were being Marvin Gaye and you were singing what's going on, you would be taking a look at the ES, the NQ, the YM, the Russell 2000, and you know exactly what is going on. It's Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So Maximilian writes in and wants to take a look at SWIR and CIO. SWIR is Sierra Williams. So, excuse me, Max, here's what we know about... Well, here's what we know about Sierra Williams. Let's start with looking at the monthly time frame chart out here. And, you know, it's a really large consolidation. In essence, this thing had made a high back in 2004. That was up in the $46 area. That was made back there with about 54 million shares. It was tested with 17 million shares. So not enough volume as it was testing that level. And that, in essence, is the top of your consolidation. Now, couldn't bust them to the upside, so now what it's trying to do is bust them to the downside. We're just taking a look at the bigger picture out here. On a monthly basis, you have a nice little hammer candle that formed the month of February in 2016. There was nearly 12 million shares down there. Price is trading with inside that hammer candle as we speak right now. Let's just put a line across the sand out there. That's a red line. Let's make it a yellow line. We already have red lines on my chart. If I make it a yellow line, excuse me, might make it a little bit easier for you to see. So here's the top of the hammer candle at $14.99. Now, last month, as Sierra Wireless was moving lower, it did it with 6.3 million shares. The hammer candle has 11.9 million shares. So, Max, the good news is price is pushing lower with lighter volume. The bad news, maybe bad news, is that you're still trading inside that swing point. When you trade inside that swing point, you haven't busted back above the top of that. That's at $14.99. Even if it's with light volume, says you can go test the bottom of that swing point. The bottom of the swing point, by the way, is priced at $9.69. You're trading at $14.21. So the monthly, and you're trading below monthly profiles. The bottom of that box is $15.94. So this says be cautious. This says, excuse me, the better buy would be the test of that hammer candle on light volume. That's at that $9.69. Will it get down there? I don't know. Here's what we do know. If we take a look at the weekly time frame chart, we can see that as we speak right now, price is trading right into resistance. Resistance being the top of that market profile. That's at $14.23. We're trading at $14.20. Come on, Steve-O. Really? Excuse me, 3 pennies is going to make all the difference in the world? Well, I believe that it will. I believe that it does. Of course, this is a weekly time frame chart, so we really have to wait till the end of the week. But right now, price is up at resistance. Here's what we know about the weekly time frame. The weekly time frame has a bearish structured box out here. What do we mean? We mean the center line at 1384, much closer to the top at 1420, than the bottom at 1306. This says that sellers are in control, or should be in control, and should be able to drive price all the way back to 1306. That's what this says. On the other hand, it's only Tuesday. Come the end of day Friday, it closes above 1423, above a bearish structured box, and that would be certainly short-term bullish, and say price could move higher. Move higher to where? That's an excellent question, too. If we take a look at SWIR, we go over to Stevie's other charts, we'll take a look at that TDST, that Tom DeMark setup trend line. That would become the target if price can bust through that resistance level. That resistance level, we've established, we've taken a look at that on the weekly time frame, and if it can't, then your sights would be set on the December 5th high out there. That, by the way, is priced at, well, I tell you, but I then have to wait for my system. There we go. 1650 would be the number out there. Here's another hammer candle that formed on the daily time frame as it made a bottom. Now, there was a small A to B equals CD. We can see when it made its top. It did it with a shooting star, the opposite of the hammer candle. So here you've got the market, SWIR, trying to hammer out a bottom, both on a daily time frame as well as the weekly. If you're asking me what's my call is keep those hands in your pocket as we speak right now, because price is up at resistance. Where is it that you'd buy it at? You'd be looking between 1306, 1381, the top of its daily profile, or all the way down at that 969 level. That Maximilian is what I see when I take a look at SWIR. When it comes to the CEO out here, oh, and I lost that chart. It's behind here. Let me just do this. Let me pull this over. If we can go get that, we'll go ahead and put those charts back up on the screen so you're not looking at the white screen saying, well, what the heck is that, Steve-O? If we take a look at this, now this has a little bit better look. If you're asking me where is price headed to, by the way, this too has a hammer candle. That's a city office REIT out here. And I like this chart better, but here's where price is likely headed to. And that is at least to the top of its weekly profile, 1186. You're trading at 1146 right now. So this too tried to hammer out a low. Now, if we go take a look at its 100% move of a move, what I mean by that is price came all the way back to a prior swing point on a weekly basis. That was a swing point from the trading session of 226.18. 1.9 million shares. It was tested with 1.7 million shares. Lighter volume, bullish reversal signal that said, okay, it was hammering out a bottom. Now, this too is in a consolidation level out here. Price is off that bottom. It was tested again back last week. Did that with 1.1 million shares versus the 1.9. Not enough sellers out here. We don't exactly have a sign of strength to the upside, but it does have momentum. And momentum ought to take it to 1186. That's what the weekly time frame chart shows you and I, Max. If we take a look at the daily chart out here, we go to Stevie's other chart, and what we can see is in this one, remember we looked at SWIR, Sierra Wireless, and we said the target, if it can break above resistance, is going to be that Tom DeMark setup trend line, that little green dashed line out here. Well, guess what it's done today? This is CIO. It is busted through. It is trading above the high from November the 15th out there, and that high is 1130. That is a bullish message. This is a change in trend signal, at least for the short term, at least while price rises to the top of that weekly profile up there. So CIO looks like it wants to move higher. It has proven itself to you. If you're in it, I would stay in it to win it. And I'd be watching for what happens as price gets to 1186. Of course, you'd want to take a look at what else is going on the daily time frame, because today is going to be day number 6, or it should be, of that Tom DeMark setup. Meaning you get to day number 9, 8, 9, or 10 could be the end of the move for you. But you'll just have to check back with me, or better yet, attend tonight's workshop. I'll teach you a set of tools. You'll be able to apply this to a chart, and you too will be able to use this system to effectively improve your trading. Thanks so much for writing in, Max. That is City Office Rent and Sierra Wireless. Let's see if anybody else has written in, because if you write in, yep, we've got one. RZ writes in. He says, What would turn you into a bear? A grizzly bear? Really? What would turn you into bear for retirement accounts? Also, what would you use as an alternative to stocks? Sake. Definitely invest in sake. You know, now I know it's a serious question you're asking. What would it take to turn you into a bear? Into a bear. Into a bear. The good news is we're about to go to break. So I want you to know that that was a strategic question out there. Bill writes in, panda bear or teddy bear? I like how Mr. Bill thinks. We get back from this break. Let's talk about what you should anticipate out there. And with regard to your retirement accounts, Steve Rhodes with TFNN. We'll be right back. The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's Setup 9 Count and Trend Lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back up, folks. So we're going to go answer the question that came in here from, what did I do there? What did I do? Here we go. From RZ. We're going to go with RZ. We're going with initials. And a really good question here, which is what would it take, what would turn you into a bear for retirement accounts? And let's start by using the Dow. So the chart that you have on your screen right now, if you're watching us on TigerTV, this is the chart that projects that the Dow's next upside move, once it clears the January highs out there on a closing base, on a monthly base, I should say, on a closing monthly basis out there, is 30,740. And that's double this 15,370 level that took place here between August of 2015 at the bottom of its consolidation, by the way, through the January 2016 level. What we're actually looking at here is not a linear chart. This is a chart that allows us to take a look at the data for the Dow on a logarithmic basis out here. So it's going to look a little bit different than yours. We can change it if we want in a heartbeat. But the interesting thing is, and this is what Stevie has to kind of grapple with, and you now have to grapple with it in your mind, was the move lower that we saw in December nothing more than a test of that rising trend line on a logarithmic basis? Well, we know the answer to that is yes, it was a test of the logarithmic trend line off of the 2009 low out there. And we also know that on December 26th, it made one, when I say it, I'm referring to the market, one heck of a bullish reversal signal at the completion of A to B equals CD patterns, the whole 9 yards. The problem with the Dow, it's still trading below the December 31st, 2017 level out there. And as long as it continues to trade below that, what I would say, RZ, is you should anticipate that the Dow or the markets are going to go back and test the lows of December. Now, that also means that this diagonal logarithmic trend line would be busted. Now, it's a monthly chart, so it can be busted and it can close back above it. But in answering your question, what would take to say that this is really a bad bear market? It's a move much, much lower. Now, you might not want to hear that because you're saying, hey, I don't want to stay around for the ride. That answers your next question. What's the next best investment? I would stick it in U.S. dollars. I would sit on the sidelines. I'm assuming in your retirement account you can't go short out there. So just simply go ahead and park it in U.S. dollars because everybody wants the U.S. dollar. You don't believe me? Go hang out in France for a little while. Go hang out with those yellow vests who, rightfully so, are basically saying no more taxes. You can go ahead and put the adjective in there if you want. And if you're sitting over in the UK where Theresa May is trying to figure out what in the Sam heck to do out there, really? So what you want to do is you want to hold on to Great British pounds? And if that's not enough, then go over to Japan where they just lock them up. You know what I'm referring to there. Yeah, so the safe haven is actually the U.S. dollar. So there's nothing wrong with being in cash out there. But at this stage of the game, a significant level of support is held. Now, that lower trend line, price-wise, is like around 18,006 or so. It would take a break close below. Just go ahead and line up the high from 2000 to the high in 2007. Put your chart on a logarithmic scale, and that would be the number that you would be looking at. Now, if we take a look at the ES Mini as an example, we could go ahead and put up the S&P 500, but I didn't. I've got the ES Mini up on my chart out here. What we can see is that we really haven't seen, we've seen that topping pattern that is present before the beginning of every correction bear market out there. So we've had the bear. We've had the 20% correction. We're still in a bull market. And levels of support have not been busted through. The first level of support on a monthly basis is just simply that Tom DeMark set up trend line. That, by the way, let's go ahead and get our cursor out here, is right down at the month, the low of the month of January back in 2017. That number, this is the ES Mini out here, is, if I try to give it to you, is this, the continuous contract is 2239 out there. So I guess in summary, the question that you've asked and raised is a good question. But at this stage here, I think you got to anticipate, should anticipate, we're going to see some kind of move lower. More likely than not, it's going to be a move lower that's going to go test the lows. Now, how will we know if that's going to happen? I say the easy way to know if that is going to be pulled off is let's just look at where the Dow, let's look at a daily base. Let's stay with the Dow out here. Let's take a look at, oh man, this is a muddy looking chart because it's got so many things out here. But let's just take a look at the closing price. Let's try to keep this simple out here. Let me get over here. The closing price in December. The closing price in December 31st for the Dow was 23,327. So I would say RZ, if you see the Dow close below that level, 23,327, that's going to be your signal that price is going to go back and at least test the lows of December the 26th out there. So I hope that answers your question. Cash, U.S. dollar specifically, is not a bad investment if you want to go ahead and become idle. Hope that helps you out. Another question coming in from Phil. I see there's one in the den. Let's go ahead and take first. Peter, we'll come back to your question. Let's take a look at Phil. He says, hi, Steve. I have UCO, and I'm up 17%. I think UCO is the ETF, if I'm not mistaken, for being long light sweet crude. Is it? Is that USO? That's UCO. It is UCO, the Bloomberg crude oil. And the question says, deciding whether to hold some or all. I see USO has TAS box top at 1035 and is over that level right now. So thinking of holding USO. Wait a minute. I've got UCO. Okay. And so now you're thinking of flipping to USO. Phil, for Stevie's son, to answer that question for you, it really means we've got to go take a look at what's going on inside the oil contract. I just have to do that, as opposed to take a look at the data from the ETF structures out there. It's just the underlying instrument is going to provide you and I with what I believe is much clearer data. And so if we take a look at, here's what light sweet crude is going to do. That way I don't have to remember whether the UCO is the short or the long or the short. Here's what we know, just as we took a look at yesterday for Brent in California. And what we said yesterday, and the same thing applies, is that price then was trading above the top of its profile, daily profile, 48.86. We said as long as price closes above that, then you've got a breakout with price heading up to 52.15. And that was the high out here from the trading session of December 7th. That happens to be your Tom DeMark setup trend line out there. Yesterday's close, as it turns out, was 47.96. 10 cents over the top of the box. No, hold on. 48.77. See, my cursor got all messed up. It closed right below the top of that profile. So there was no message there that it was a bullish message. Same rule applies today. If light sweet crude closes over 48.86 today, 52.15 is your next target level before you would make any decision about USO or UCO. That's what Stevie sees, Phil. And that's not using those TAS market profiles on those ETFs. Let's just stay with the contract here. Steve Rhodes with TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Peter from Park City had asked a question earlier about the advanced decline oscillator reading for the New York Stock Exchange. And the question was, is it above 303? And as we speak right now at this very moment, the answer is yes. As we speak right this very moment, the reading is 323.22. Now, it's the highest reading that we have seen, quite frankly, since March 18, 2009. Which was up at the 329 level. And, of course, that reading just simply cemented the bottom on March the 6th. And we know the story is that the New York Stock Exchange has just simply marched on higher. Now, the reading here, what we're taking a look at is the market breadth for the New York Stock Exchange. So, you know, whether we use the New York Stock Exchange or we use the NASDAQ Composite, those would be the two largest indices for us to be able to get the strength of the market breadth out here. We were up near these levels back on, this is a daily time frame chart we're looking at, on March the 7th. We were at 321, so just slightly below that, March 7th of 2016. What the market did was it eventually moved to higher price out there. So what does that mean about today? It kind of goes back to the question about, you know, what turns you into a bear? Well, first, having this type of market breadth out there doesn't really turn you into a bear. It just doesn't. Remember, bear markets over the last 100 years have occurred about once every 5 to 6 years out there. We can go back and look at over the last 70 years, it shortens up a bit. But the last bear market that the S&P 500 saw was when? Wrong. It was not March in 2009. It was in 2011. 2011, we saw a decline from peak to trough of just over 20%, much like we saw out here on December the 26th, if we just go measure from high to low out there. Bear markets do not mean that the bull market is over. They're just for our blanks and giggles. Starts with an S and ends with an S, and you can go ahead and figure out how to fill up the other letters in there, and giggles. It's just measuring the depth of a retracement. That's all. You and I spend time taking a look at retracements, and we realize that a 0.382 retracement is nothing. That's a 38% retracement between swing points. But let's not get caught up there. Let's come back. Let's stay on course here. If we take a look at the last time, then before that, before the 2016 timeframe, when the New York Stock Exchange Advanced Decline Oscillator got up to a high level, that was at 244 on July the 5th out there. What happened to price? And I'm not referring to some small pullbacks and then boom, it takes off, but boom, it takes off. Then we have to go all the way back to 2009. We just talked about. Now there was one reading out here. There was one reading during that bear market between 2007 and 2009, and that highest reading got up to a price level. Certainly during a counter trend rally, it looks like we're 340. 340 out there. Well, we're at 320 right now, 320.27. 340.87. That was on the trading day of January 2nd, 2009. I think we're in the early part of January. And then we saw one more flush to the downside which made that big bottom in March of 2009. Can the same thing unfold? In other words, the question that I was also trying to answer before the break is I was saying, you got to anticipate, you should anticipate that we're going to go see the lows of last year get tagged, touched, maybe close below, tested, something along those lines. I wish we had more instances where we could go back and measure these plus 300 levels out there, but we just simply don't have them. We can come back here to the time frame where I don't have them at 294 on May 26, 2004. May 26, 2004. And what did the New York Stock Exchange do, in essence, from that point forward? Yeah, it kind of went sideways for just a bit, and then it was off to the races. I think the answer to the question is when you have market breadth that is this strong, such as what we have here, it bodes well for the future. What it doesn't say is what's going to happen tomorrow or the next day. It does say, hey, guess what? We're a little bit overbought. So what? So we're a little bit overbought. You work off that condition, and then, boom, you continue off to the races out here. Don't think that the market's over. If what the market does is what we just anticipated during this last 20-minute discussion here, which is that the lows of last year could go be tested. That does not mean it's over out there. So I hope that helps you out, Peter, with regard to what the New York Stock Exchange is doing. And then just simply going back, take a look at the chart, see if there's any kind of meaning there that maybe you and I can go ahead and apply to. No, it was not smacks and giggles. It was not smacks, but nice hit. HIT is a sort of a clue with regard to the old giggles out there. Hey, if we take a look at email here from Earl writes in and says, hey, Steve, does Apple have to go higher near the old high to say the market can go back to its highs? Nah. Apple's not as big of a weighting. What is the weighting inside Apple now versus where it used to be? It's been reduced quite a bit out here, and Apple's just one stock, and no, the market can go higher without Apple. But we should go take a look at Apple and just see what the heck Apple is doing out here, right? If we go take a look at Apple, here's what we're going to see on the 3 time frames, AAPL. What we're going to see, 9%. Thank you, David. So Apple now 9%, used to be what? 17%? 17, 14, whatever. It used to be, a big number inside the NDX. I don't know what it was inside the Dow. But if we do take a look at 19% at the high, 19% at the high. So, Apple's kind of been cut down to half of what it used to be up at the high with regard to its weighting inside the Index 100. Here's what we know as we take a look at just simply Apple and its TAS market profiles. You've got a brand new weekly profile right now. And that says price ought to hold the bottom of that box. That's 147.78. Now, on a daily time frame, a brand new box formed today. And resistance is 152.42. So Earl, I should say. I'm sorry, Earl. If you're asking me where's Apple going to run into its next level of resistance, 152.42. If it closes above that, the daily says you move up to 159. The weekly says you can move all the way up to 170 to 176 out there. That's just simply the message. If we take a look at the daily time frame for Apple out here, and you and I know how markets, how stocks, how currencies, how everything makes significant tops and bottoms, well, the way that Apple made its top out here on October 3rd was with that Rhodes momentum indicator signal. That very next day was the bearish reversal candle, the old bear sash out there. And what happened on that day as well? You got it. Price closed below Stevie's green line. It was red, but it really wasn't green, but it's Stevie's green line. Same thing. Just when it's green line, it says that the price oscillator is above zero out there. And that was it. That's at the top. Now, in the case of Apple, as it was moving lower, as it gapped down on January 3rd, 2019, what was it doing? It was making the same pattern that it made up at the high. That wasn't enough because that didn't prove itself to us, Earl. It did on the next day when it formed that bear separating line, a bullish reversal signal, and closed above Stevie's red line. Yesterday was a hammer. Today's a bullish engulfing. I'm telling you, buyers are out there trying to say, I want to move higher. They've just got to clear 152.42. before they get the all clear to do that. Nope. Markets can go back to their highs without Apple. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Phil wrote back in and said, hey, Steve, I was just using the TAS market profiles that you provide in my newsletter each day with regard to a USO. And I do have multiple ETFs that are in there because whenever a subscriber says, hey, can you add this ETF somewhere in there with regard to the Bob system, you know, so that you have the top of the box, bottom of the box, Stevie's red line, and so forth. So I definitely give that. But inside the daily newsletter, Phil, you also get each day what's going on with regard to light sweet crude. For a 30, a 60, a 120, a 300, and a daily time frame out there. And my preference is that you use these profiles to identify what the underlying instrument is doing versus USO. I'm not saying that it won't work. I'm just saying it doesn't work as well, or at least that's my experience. Here in USO, prices over the 1035 level, as you have pointed out. My preference is to always pay attention to what's going on inside at least the daily contract. Here you've got green shoots across the board for those time frames. Says that what light sweet crude wants is some higher price out there. So thanks. You've got access to both. Use the best of both worlds out there. This question here is from Eddie. He says, is there any scenario that you think we do not go test lows of 2018? Why can't we just pull back a bit and go higher? We can. But I can say that over the course of the last 125 years, there is a 70%, give or take, 70% chance that we go back and test the lows. just using probability, just trying to master probability, if that, in fact, can be done. Last question. This comes in from Brett. Brett says, thanks for reading us on oil yesterday. Can you look at TGB? He's got a weekly chart in here. We only have a few seconds. Let's go take a look at TGB. I won't be able to read your full question, but let's look at TGB. I believe that is Taseko Mines out there. And nice day today. Prices above the top of the profile. Did that 3 days ago. Looks like a once higher price. I would say if it can clear 65 cents, then 76 cents becomes the number out there where price should head to. The other level to be watching, I don't know. I'll tell you what I will do, Brent. Hopefully I don't need a reminder. We'll take a look at it come tomorrow. Folks, stay tuned. Your favorite polar bear's up next. Would love to see you at 5 o'clock. Teach you some very cool trading tools and indicators out there. Just subscribe to Mastering Probability. Do it now. If you can't attend live, that's okay. And we'll see you tonight or tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.